Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. First, let us look at the last week. Last week, I cautioned markets are going to be very highly volatile for two reasons. Number one, US midterm elections, and the other one is US consumer price inflation data. So as expected, one good news comes, market shoots up, then one bad news comes, market shoots down. It was very, very volatile. The news came, the people expected Republicans to win the elections, but there was some uncertainty, the markets fell so much. Then the next day, consumer price inflation data came much better than expected and market shot up. In the last 2 days, Nasdaq was up 9.4%. and which is actually the biggest 2-day rally in the last 15 years in Nasdaq history. And this is what will happen when the markets are extremely oversold. Nasdaq is still, 25-30% away from all-time high. So this kind of bear market rallies will always come. So coming back to our markets, Nifty was up nearly 200 points, but it was not in straight line. There was a huge volatility. Nifty went close to 18,000 but did not break. Again shot up, and Bank Nifty also shot up about 400 points. And markets, were volatile in tandem with the US markets. And on Friday night, SGX Nifty closed around 18,500. If you can remember, last week I said Nifty is likely to trade between 18,000 to 18,500. So it went to 18,000 also on Tuesday, and then now it has gone to 18,500 also on Friday night in SGX. So this is a wide range, but it moved on expected line. Then we have some additional good news. On Friday, the short covering rally came triggered by the news from HDFC twins. I think I spoke to you already last time. So what happens when two companies are being merged? So when two companies are being merged, HDFC is being merged with HDFC Bank. So HDFC's weightage in the Nifty will be brought down to 0 initially. Later it will be increased along with the merged entity. But now on Friday, the NSE announced that, so there is no such thing. The merger will go along with, without losing any weightage. So the weightage will continue to remain the same. So because of that, HDFC shot up more than 6%. And if you can remember, last few weeks I've been telling, if Nifty has to take out the all-time high, the HDFC twins and Infosys and TCS, what I call it as IT twins. So these four stocks have to improve. Why? Leaving these four stocks, most other stocks are already trading around 52-week high or all-time high. And because of this merger issue, HDFC twins were way below their 52-week high. And in fact, for the last 2 to 3 years, these two stocks have been underperforming. And then because of the Nasdaq problem, US inflation problem, the IT stocks are also far away from their all-time high. But what is happening exactly now on Friday, and this is what is happening. So both TCS and Infosys started moving higher, and both HDFC and HDFC Bank also started moving higher. So that is how Nifty closed at 52-week high. On Friday, Nifty closed at 52-week high, and Bank Nifty closed at all-time high. And now the Nifty all-time high is just only 100 or 200 point away. So who knows, if things go well next week, then the markets are likely to take out all-time high. But if I look at the market setup, US markets, there were a lot of uncertainties. So those uncertainties are over. Just now I read somewhere, so Democrats holding the Senate. So uncertainties are over. So when uncertainties are over and the two markets have shot up, like Nifty in the last few weeks shot up from 16,750 to 18,500. It was a big rally. So logically, market should consolidate. And as long as there is no major events, the markets are likely to consolidate maybe 250 point up or down. The reason why I'm thinking it may consolidate, the domestic institutions which have been supporting the market throughout the year now started booking the profit heavily. So last week also, in fact, almost every day the market goes up or down. So FIIs will keep pumping in the money and the domestic institutions keep booking the profit. So the more higher it goes, so the domestic institutions will be tempted to book more profit because they've been supporting the market since when Nifty was 15,200. So corporate results more or less is coming to an end. I think tomorrow is the last date. Over the weekend, whatever the corporate results have come, so seems to be good. The overall, so this quarter corporate results, I would say, were excellent, bearing very few companies like metal sector. But despite declaring not so good results, metal stocks also doing well only. And then some stocks like Wipro. So other than that, overall, the corporate results have been very good. And that is one of the reasons why I'm taking a bullish view for the December as well as the next calendar year. So coming back to open interest, the 18,000 put option seems to be having highest open interest. And the shorts are still there. As long as the shorts are there, the market will continue to move higher. So I'm expecting basically Nifty to trade between 18,200 to 18,800. And the market can come to, a violent short-term correction if the all-time high is taken out. There will always be one group of people who are waiting to exit the position when all-time high hits, or people are sitting for the long-term investment with loss. As soon as they see their break-even, they will book the profit. So that can trigger some short-term corrections, and that correction may be, maybe violent. When I say violent, I'm talking about 200, 300 points, not more than that. So one has to be cautious. So if the all-time high, if you are a trend follower, if the all-time high is taken out and wait for correction, after a minor correction, again when it takes all-time high, that is when you have to take a long position. So I'm also going to try some trend following, and but you all know I already have some long positions during the Dubai conference. So I've taken some long position live in front of the people. We are going to have a conference in Cochin. So there also we will be taking some live. And in fact, my conference and my workshop, the best time to attend is November to January, because we take a lot of positions for the next year, December, where it will be liquid. So both my workshop and conferences, so seats are still left under what we call it as early bird offer. And right now we have about 110, 120 registration for conference. When it comes to 150, we will stop, we will increase the fees. And workshop, I don't know, I have to check with my office. If you want to know the more details, you can check the link in the description. Now, coming back to the data. One is that the consumer price inflation data is out from US, but there are many other countries' consumer price inflation data will be coming in the next week. And more importantly, India's consumer price inflation data will also come on Monday. It is widely expected that the inflation data will be below 7%. Because for the last few months, the inflation data has been above 7%. So if it comes below 7%, the sentiment will become more positive towards the stock market. And then in few countries, there will be retail sales data also. So retail sales data and consumer price inflation data are the two key data we have to watch for the coming week. So all in all, for the last few weeks, I've been saying the major trend is up. So as long as the trend is up, we just ride the trend. So we do a lot of call ratios in the trending market. So I will give you just 1 minute interview with my friend who is going to speak in the Cochin conference about ratio spreads. I'm introducing the first speaker for our conference, Mr. Srikanth. And nowadays people call my office, they say, we want to talk to sir. If my secretary says Sundar sir is busy, they say, who want to talk to Mr. Sundar? We want to talk to Srikanth. Okay, so without wasting the time, let us go. Srikanth, tell me what is it you are going to share in Cochin conference?
Hi everyone, I am Srikanth. So with respect to, I'll be explaining about the ratio spreads strategies. I have done the ratio spread strategies in the Dubai conference with respect to the US markets. So I'll be discussing the different ratio spread strategies with respect to both US markets as well as the Indian markets. We can extrapolate the same thing to Indian markets, and it will be a magic strategy which you will be learning.
Hope you enjoyed watching this video. Thank you for watching.